Folks, this live stream is brought to you by my sponsor AAA FX. Now, they're a fully regulated broker in Europe and South Africa offering Forex indices, commodities, crypto, and over 100 stocks. Now, at AAA FX, you pay no commission on any Forex pair using their ECN Plus account and low commissions on cryptos and stocks. Plus, you can deposit with cash or crypto, get a free VPS with deposits over 5K, and easily integrate the well-known copy trade service Zulu Trade. While you're waiting for the stream to start, go and check them out by clicking the link in the description, comments, or visit AAAFX.com.
Alright guys, what is up? Welcome, good morning, good evening, and good night. Today is the 13th of September 2022. I am also going to be informing you guys that next week and the week after I most likely will be taking a break from these live streams as I'm getting married in literally 2 weeks or less than 2 weeks. So I'm going to be out of commission trading and teaching and all of that. I'm going to be out for a little while. I want to talk tonight about a few things that I would have, come into contact with or interacted with throughout the week since last week, right? What we're going to be doing, we're going to take a look at a trade that I took on AUD/USD. We are also going to be talking about a behavioral problem two behavioral problems, sorry. And then we're going to be talking about holding trades. So I think we can get it started with talking about the behavioral problems, right? Now, I'll showcase AUD/USD in a bit. I promise you that we will talk about some charts. A big problem I think a lot of traders face, my friends, is we think that it's all about the charts, right? I have seen it, and I teach every day, literally multiple times a day, right? And I've seen it time and time again where traders would feel like, it's all about the technical analysis. And in actuality, their problem has nothing to do with the technicals. If you ask them why they entered the trade, they can explain exactly why they entered the trade, where they entered, what was their thought process, what was their reasoning. They could give you all of the particulars. And it makes sense, right? But yet they're still failing because of a lack of consistency, or maybe they're FOMOing, or revenge trading, or whatever. These are behavioral problems or behavioral patterns. And a lot of the things that block you from success in this industry, believe it or not, are behavioral, right? They are functions within the mind that block you from doing the thing that you're supposed to do, right? A classic example is one that even I suffer with, right? I do it periodically, right? And I did a video on it, a short for YouTube on it 2 days ago, if I'm not mistaken, or maybe 1 day ago, right? And I asked the question, and I want to pose the question here now. Why is it that we would take a trade, win, trade close and profit, and you're up and everything is good, and then you go back for more only to lose, and then you start to give back all of that profit? That has nothing to do with technical analysis. You all realize that, right? That has literally nothing to do with technical analysis. It's more to do with a behavioral pattern. It's you not being able to say enough is enough. It's you not, and listen, I face this as well. I'm not going to try to play like I'm above anybody in this case. I do this as well. That's why I brought it up, because I did it literally last week, where I didn't give back all, but I took a trade after I've already won. And it's like, why did I do that? You understand? Why would I do that? Why would I make that stupid, silly mistake? Right? And it's to do with, again, the constant stimulation from the market, right? One of the ways I have learned to fight this, because again, I'm just a human, I'm a normal person, so I am going to fall victim to my urges ever so often. But one of the things I do to kind of fight that is to distract myself with the things that I actually love doing, right? So I'll give you an example. For me, I love playing with my dogs, right? Now, Where I moved into this new house and stuff, I'm no longer in my old house, I'm in my new house. I don't have dogs here yet, right? So I have to distract myself with other things. But interestingly enough, because it's a new house and I didn't even put up my shelves in the back of this office yet or nothing. I have all these million and one things to do. So to distract myself from trying to get back into the chart to take another trade, to probably give back what I've already made, I'm gonna literally just do something around the house. I want you to also remember this, right? Trading should fit into your life. Your life should not revolve around trading. And I feel like a lot of people do this. A lot of people make trading revolve around their life, right? Or sorry, make their life revolve around trading, I should say. Meaning everything that they're doing, it comes back to trading in some way. I was working with a student literally about an hour ago, and he asked me a question. He knows himself. He asked me a question about meditation, right? And do I use any kind of meditation to help calm my mind and all of that? So I gave him an example similarly to this one. Right, again, this is a behavioral pattern. I give him an example similarly to this one, where I told him, I said, meditation for trading is actually, it can be considered counterproductive, and let me explain why. Meditation, from what I understand by meditation, is the act of releasing all thoughts out of the mind, thinking of nothing. But if it is you're trying to trade or be a better trader, and you're meditating to be a better trader, what are you going to be thinking about? Let's be real. When you're meditating, you're going to be thinking about, I need to take better trades. I need to take better trades. I need to be more calm when I'm trading. You're not actually meditating. You're just focusing on this one thing. You're giving all the energy to that one thing. So you're not meditating. You are just focusing on trading, right? So instead of so what I'm trying to get you to understand is you need to be able to detach yourself from trading ever so often, right? Because again, they say all work and no play makes Jack a dull boy. You do want to live a life outside of the act of trading. This is just a career. There is life after that, right? So that's behavioral patterns, behavioral problems that I think some traders might face. If you can agree or if you can relate, I mean, hit like on the video. Obviously, I mean, it's something that I think a lot of people might be able to relate to. I'm telling you that it happens to me as well. I'm not trying to play like I'm this god or anything like that. That these things, I'm above every one of you. I'm not. It happens to me as well, right? And one of the ways to stop it is by first, obviously, acknowledging it, and then two, doing things to distract yourself from that fact. That's the first thing I want to talk about. The next thing I want to talk about is basically being able to stay in trades for long. Well, actually, no, I'll do that. That's the last thing I'll do. The next thing I actually want to talk about is being afraid is another behavioral problem. Being afraid to miss a trade, right? So this is what is known as FOMO, right? Now, you'll be lying if you say that you've never battled with FOMO, right? Oh gosh, look at my friend saying, look, he in a trade. Oh my goodness, he's winning this trade and I'm not in anything. Let me go and get him. You got into the trade not because you had rules and particulars that you wanted to see in, but because somebody else did. You have now been induced by stimulations externally, right? And you are afraid to miss out on a trade. But interestingly enough, by trying to get into the trade that you know you're not supposed to take, you actually work in reverse because you're taking trades that one probably don't align with your normal rules and criteria. Two, you don't even know why you're taking the trade in the first place, so you don't even understand where it might probably be going or where it might try to get to. And three, obviously, because you took it in this anxious state, what do you think is going to happen? You're going to be anxious throughout the duration of the trade, right? Again, which is a behavioral problem. The problem with all of these things, and especially that last one, that anxious state, right, blocks you from actually doing this last thing I want to talk about, which is holding the trade for very long. Because you don't even have an analysis on that trade to begin with. What do you think is going to happen when the trade actually does do what you think it is going to do? And then you are faced with the situation that you want to hold it, but you don't know what the trade is going to do. You can't analyze. You're so focused on missing out on the trade, you don't even understand what the trade was going to do in the first place because you had no consolation or concept of the trade in the beginning. So one of the things I'll tell you, you know, don't be afraid to miss the trade. Right? Yes, that rhymes. Don't be afraid to miss the trade. One of the things a student was telling me as well recently is they saw someone calling out, they say, well, possible sells on this thing or whatever. Not myself, somebody else. And they just dropped everything and went and sold it. They didn't even have an analysis or anything. Now, is that trading? What do y'all think? Is that trading? That's not trading, is it? That's guessing. That's gambling. You don't want to do that. You don't want to put yourself in that position. Put yourself in a position where you are able to analyze the market and make decisions on your own. And doing that will allow you to do what I'm going to show you now. So, if you've watched my video on YouTube that I posted today, right? I took a trade earlier this morning. If you're in the Trading Nuts Telegram group, you would see that I also posted a screenshot or a few screenshots of trade that I'm in. Now I'm currently in a trade in a sell on AUDUSD. Just let me know, guys. Can you see my screen? Let me know quickly. Yes, y'all can see my screen. No, yes, no. Just give me an update. Yes, no, yes, no. Lovely. All right. So essentially, this is the trade that I took earlier today. Right now, I was in a class with a student at the exact moment where this thing dropped. Right. Again, don't take my word for nothing. Go and look at it. Right. I was literally in a class with a student. I put that in the video, everything. The student and all, he was stunned. Right. And what was happening? We were actually breaking down both GBP AUD and AUD USD. Right. And we were interested in the AUD pairs apparently. Right. And he just happened to say, he wants to take a look at AUD USD because he was bullish biased on AUD USD, right? And he was bullish biased because he saw what he thought was a W at the low, right? And I told him earlier in the week, because he sent this to me earlier in the week, I told him earlier in the week, I do not consider this a W. And let me explain my thought process for that, right? The reason I don't consider this a W is because a W is a reversal pattern that reverses to the buy direction. Now, you would typically only get a reversal to the buy direction when the market has cleared all of the sellers, right? Listen to me, cleared all of the sellers and taken the extreme low, right? So if we looking at it like this, yeah, it looks like a W, but anytime you zoom out, you will quickly realize that there was another low left that was not taken out, right? And that would be this low here. So he thought that this here would have been the W, but if you realize there was this low still left to be taken out. Why is this low so important? What is the significance of this low? So I want you to think about this now logically, right? And just tell me if it's making sense to you. Again, I could be wrong. I'm telling you now, I could be wrong, but I just want to know if it's making sense. If anybody is buying, right? If anybody is buying at this low, right? And they don't have any stop loss on this trade or anything, and they were buying all here, buying all here, buying all here, right? And then it comes all the way back, but they still have their buys open. If the dealer actually reverse the market off of this area to actually do something like this, to go all the way back up, I want you to think about this. Wouldn't it then give the buyers maybe, just maybe, even another better entry to re-enter for another buy, giving them an ideal scenario? What do y'all think? What do y'all think about that? It gives them the ideal scenario. For anybody who wants to buy again, it gives them an ideal scenario. And then for anybody who was buying and did not close their positions or did not trail their stop loss into profit or did not have any stop loss to begin with, if they aren't taken out and it buys again, it's an ideal scenario. Do we agree with that or do we disagree? It's ideal for the masses, right? The majority of traders. They say the 90% that lose, Right, that's a statistic, by the way. Right, 90% of traders lose 90% of their money in 90 days. These are the same traders who buy support and resistance, well, buy support, sell resistance, and trade trend lines blindly. And I'm not saying you can't buy support and sell resistance and make money from it, but doing so blindly without any proper analysis. And I'm saying that without any use of indicators as well. Doing that without proper analysis, don't even waste your time. Just give your money to the market. All right. So, in actuality, what I thought here is because I did not think that this was a reversal, because this low had not been cleared out, I was like, yeah, this could never be, in my opinion, a reversal. So, I was like, all right, cool. Because it's not a reversal, if you know who I am and you know what I perpetuate a law. The law is very simple. Do not go against the momentum. Listen, if it is you've been watching my live streams for a while, you would know me to say this. Do not go against the momentum unless a reversal is clear. So let's ask the question again. Is this a clear reversal based on the fact that on the forward time frame, this low had not been cleared? Is it a clear reversal? No, it is not. I said this to the student, and it's only when he saw it he agreed. And then the next thing you have to understand is because AUD USD is overall bearish, the law is do not go against the momentum unless a reversal is clear. So the reversal is not clear, the momentum is bearish, don't go against the bears. So that being said, anytime the market is buying in such a big bear market, this buy is an induction. It's essentially put like that. It's designed like that to make traders, make the masses, as we call them, feel, right? And this is my belief, make the masses feel like it is actually going to buy off of the low. They get the best potential entry. They beat in their chest and they're saying to themselves that, yes, I get it here today, right? That catch AUD USD today. And they are thinking in their heads and they're thinking in their minds, they're wise in their own eyes, thinking that because they bought a support and they got the best potential entry, that is going to go all the way to heaven. But in actuality, that buy is an induction. All right. So the next thing you have to understand, so just like that, we know it's not a reversal, the direction is bearish. So it's typically the direction should be, or we should be looking for sells, right? The next thing you have to find, and I speak about this also very, very openly, you need to talk and you need to figure out where the liquidity might be. What is liquidity? Liquidity is energy for the market. We spoke about, you as a human being needing food, nourishment, sustenance in your stomach, in your belly, to be able to keep going, to be able to keep walking. The market is the same thing. The market needs nourishment, sustenance, energy in order to keep functioning. How does it get that sustenance? By going for it, going and seeking it out. Where does it do this? In areas where there's a lot of traders. Where do we find a lot of traders? In these areas. So interestingly enough, and you see I had this here as well. Go back in my last live stream. I think I drew maybe either this one or this one. I know I had this. I did not remove any drawings. I try my best to not remove any drawings. Interestingly enough, this exact zone that I had all the time where it bounced from the last time is where AUD USD was on this morning. Right? So I'm gonna put the replay function on here now. Right? And we'll use that. So from the time I saw it came into this zone, this is what we were looking at in the class with the student, right? We were looking at this, and I think price was like right here, if I'm not mistaken. Yes. All right. So I was like, all right, cool. So it's clearly it's creating now maybe, just maybe, a new possible liquidity. Why do I say that? Because in recent time, this is the last place price has been to 3 times. Why do we say that? Let's think about it. 1, 2, 3. All right. So that's the last area where there's a lot of traders per se, right? Cool. And then I started to play with different time frames, starting to try to figure out if there's a potential entry, because from the time I realized it's not a reversal and it's on a liquidity zone and it's starting to push back down, something about it is telling me that it just might be trying to sell off. And I said that live with the student on the record, right? It was like 5 minutes and showing me nothing, but this is nice bearish engulfing, cool. And then the 1 minute came in, you see nice rejections to the high, so you see nice bullish rejections, right? Cool. And then we go candle by candle, and it started to produce this seemingly what looks like a support, right? And this is, mind you, minutes before the news, which is CPI. Now, I'll tell you this as well. I did not remember that there was CPI. I didn't. But it goes to show that fundamentals, while they do have their place, if you understand proper market structure, and when I say proper market structure, I don't mean higher highs and higher lows. If you understand proper market structure, what a reversal really is, where it really happens, why it really happens, all of that, if you understand that and you understand where the market might be going, the news is just going to push the market there in the first place, regardless of what the news, whether it be positive or negative outcome, right? So I then said, and I had this drawing right here, this 1 minute time frame, I said, it can probably try to push back up to this area. So I'm saying, all right, cool, and we're watching it. And then still inducing buyers here. And you know that it's inducing buyers because it's literally creating what looks like a support or demand zone, right? And then it starts to buy. What do you think traders are going to see when they see this? All the time it going up. They're saying they might even draw trend lines to make it align. They might say, all right, maybe this is something. Well, they'll say this, right? Cool. And they might say, all right, maybe this. Looking good. Yeah, man, that's a trend there. That is we cooking with gas. That's looking real good. So there's not only a support, but it's also a trend, right? And that makes traders believe, again, engulfing candle makes them believe like, yeah, this is it here. The buy coming in, right? And then it creates a pin bar off of the same zone that I just recently drew. Creates a pin bar. Now the pin bar is not necessarily the best thing for you right now, because this pin bar, what it really says is it's indecision. It's not decided on where it wants to go. So we'll leave it alone for now. But the next thing that happens is it starts to drop, right? And it comes again to induce, watch it properly, to induce off of the support. And then this is where I sold it, which was 1 minute before the news. 1 minute before the news. And you know something? That was the end of that. That was the end of that. It literally just dropped like a rock. In no time, in less than a minute. If you go on, I really hope that you go and watch that video that I created. In no time at all, it dropped 70 pips, which is a 1 to 7 in a minute. I want you to think about that. A 1 to 7 risk to reward ratio in 1 minute. And what is really freaky about this? Because that's cool. 1 to 7 is cool, right? Yeah, that's cool. I'm still holding this trade as we speak. I have not closed it. But we'll get there. All right? So I decided, to proceed about my business. I just literally was like, all right, cool. Let me watch it for 2-3 minutes just to see what's happening. Is it coming back? Is it traders trying to fade it or whatever? And I'm just watching it, right? And it's continuing to drop, right? So all here, I'm, just sending images to whatever groups that I'm in, blah, 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 blah. And I'm doing what I have to do, right? And by this point, AUD USD is well over almost 100 pips. It's 90 pips in profit. So at this point, I'm saying, right, it's clearly, so if you go on the 50-minute time frame, at this point, I'm saying, yeah, AUD USD is clearly bearish. And as you can clearly see, it has been bearish all the time. So nothing changed. The state of AUD USD has not changed. It's always been bearish. This bull move is just an induction. All right, cool. So I then proceed to put my stop loss to break even. I jump in my car. I wait because it was raining by me. I jump in my car. And I went to run some errands, went looking for a belt, for my pants, for my suit, and all kind of madness. I go on about my business, right? And throughout the course of the day, I just, because I'm obviously hooked up through my phone to MT4. And throughout the course of the day, I'm just literally doing what I have to do. And by the time I get back home, AUD USD is literally like about here. And it's at 100. And so this is around the area where I started to produce that video, because I was like, yeah, this is definitely a really nice trade. So yeah, I produced this video. Now, my stop loss is by this red line currently. right? And this is what we want to talk about now: holding a trade for freakishly long, right? You want to be able to hold winning trades, and you want to close or cut off losing trades. So right now, the trade, I'm gonna stop this replay function here. Right now, this trade is floating. Listen to the word I'm using: floating at 174 pips, right? So it's floating at a 1 to 17 risk reward ratio. Put that into perspective: 1 to 17 risk reward ratio. If you risk 1% on this trade, you'd be up 17%. Full disclosure, I risk 0.5% on this trade, so I'm up just a little under 9%. Just a little under 9%. If the math is correct, let me tell you. Yeah, just a little under 9%. I'm up right now. Right? Now, how do we trail this? How do we keep this open? Right? And why? Let's actually talk about that. Why do we keep this open? The reason for keeping the trade open is something that really resonates with me, and it has resonated with me for years, is really try to hold winning trades for as long as you can, because you don't know when you're going to get the next one. I dare any of you, anybody listening to me, whether it be live or recording or what, I dare any of you to tell me when you think you're going to get your next winning trade. You'd be lying if you could give me an answer, because you don't know. But what you must do is, when you are winning a trade, if you can hold it for freakishly long, if you can hold it for very, very long, it actually helps buffer any future losses, right? Now, you can't hold a trade for very long if it is you set a limit on it. The goal should always be, in my opinion, this is how I trade, the goal should always be to minimize the risk and maximize the reward. But you cannot maximize the reward when you limit it. This is why I never use take profits. Never. I don't ever use take profit levels. I will only ever trail my stop loss into profit. How do you do that? It's actually a lot simpler than you think, right? The whole idea: use the same liquidity zones. Think about it. If we know that price targets liquidity, right, or targets energy zones, right? If price targets one of those energy zones and does not break it, wouldn't it then be safe to say that if you can put your stop loss right past that zone, past that area, that it's a safe space to put your stop loss, because it's having problems breaking that area in the first place? Do we agree with that? But here's the problem, and this comes back to a behavioral pattern, right? Many traders, when they see trade winning, they find it very hard to keep the trade open, because one, you don't know what to do, right? Because you ain't know what a winning trade looks like. First things first, you ain't know what a good trade looks like. And then two, you don't have any constellation or concept of how far it might go, because you don't understand what market structure really supposed to look like. Remember, I told you, based on the 4 hour, I want to see price clear this low. That is exactly why I drew this line and I stopped it right here, because I need price in order for me to feel good about this trade. I think AUD USD needs to clear this low. So I have no intention on closing it until it gets to that low or stops me out, whichever comes first. Right? So because I have that as a target in mind, I'm not going to set the take profit there, because you know what could happen? You could set the take profit here, and then it clears this low and then keeps dropping, and I have seen that time and time again. You will set the take profit at that last low that you think is going to clear out, and you know what it does? It clears that low and then drops 400 pips after that, and you stuck there, sitting thinking, why did I have a take profit there? And you know what that actually ends up causing as well? Another behavioral pattern, which is called FOMO. Because now you're studying, oh gosh, I'm missing out on that 400 pips, I need to get back in, when you could have just stayed in to begin with. Am I making sense? Is what I'm saying making sense, or am I just talking a bunch of garbage? Am I making sense? Is it making sense? Is it computing? What do y'all think? I'm genuinely curious to hear what are some of your thoughts. Do you agree? Do you disagree? Challenge me. Challenge me. I'm more than welcome to anybody challenging my thought process, because again, like I said, I don't proclaim to know everything, and this is just the way I do it, and it makes sense to me. But if you feel like you do it a different way and it makes more sense your way, challenge me. I would be glad to have a discussion. What do you all think? Anybody else? Grade design says makes sense. Anybody? What do you all think? So for me, right now, I am secured. This trade for me is secured at just shy of 100 pips. It's literally like I think 99 point something pips. So if it comes back and it does happen to break this liquidity, it's gonna take me out at 100 pips, which is still a 1 to 10. Boo hoo. How many of you could do a 1 to 10? How many people do you know could do a 1 to 10? Consistently, by the way. Because this is not the first and I think it'll be the last. Alright? How many people, how many traders do you know have average risk reward ratios of 1 to 5 plus, 1 to 10 plus? That's the question. And that's the thing. I have proven time and time again, your win-loss ratio does not matter if your risk-reward ratio is disgusting. That is what makes me, that's where my superpower comes from. I'm not trying to win every single trade. I acknowledge the fact that I'm not going to win all. I know I'm not going to win all. I embrace it. But when I am winning, oh, I am winning. You understand? I say it all the time. It's like that Dos Equis ad, that bear ad. You know, I don't, well, how he's doing it is like, I don't always drink beer, but when I do, it's a Dos Equis. I don't always win a trade, but when I do, it's big. It's big. And that's how it should be. In my opinion, I think that's how it should be. You should be able to take a trade and have it win just immense profits. Because I don't know about you, but winning piece, small here, small win, small win, that is very tiring because you need to keep up with each trade, each new trade that you take. I believe it was Warren Buffett who said that time in the market beats timing the market. Meaning the more time you spend in one particular trade is better than trying to take 10 or 15 other trades. I'll tell you this as well. Because I am holding this trade open on AUD USD, regardless of what it does, I'm also not feeling inclined to try to take another trade. You understand? I'm not feeling inclined to try to go and enter another trade, which is another behavioral problem or behavioral pattern, which is something called it's FOMO, but it's foggy, which is the fear of getting in, right? You want to take the trade in, but you're afraid of getting in because you're afraid to lose the next trade. And I know that some people face that as well. So we all know about FOMO, but there's one called foggy, which is the fear of getting in. You're afraid. You so don't trust your analysis because you lose the last 3 trades, right? You're so afraid of getting in, right? Because you don't want to lose another trade. You're battered. You understand? You don't want that. But by staying in one trade for very long, it not only helps, I don't want to say your ego, but it also disrupts you from trying to look for another trade. Make sense? So I see James here says something. I'll catch 100 pips and close, and trade moves 300 pips. So is it that, and this is a genuine question here, is it that you are closing it manually at 100 pips, or is it that you're trailing and catching that 100 pips? Because there are solutions to both. What do you think the issue is? Or is it that you're setting a take profit at 100 pips? What do you think the issue is? Anybody else faces this problem? That, you would see the trade go like 100 pips, whatever, blah, blah, blah. And then, you close it and then it keeps going. Anybody else faces this issue? You set in a take profit at 100 pips. So the problem there is your targets are off. Because, interestingly enough, if the market is going to go 300 pips, there's nothing you could do to stop it. You understand? There's nothing you could do to stop it. So what's the problem is your targets are off. Where you think there's liquidity, it's not. You understand? So that's why when it stops you out at 100, it keeps going, because where you think there's liquidity, it's not actually liquidity. It's just probably just a zone or whatever. So that's something to take into consideration. Maybe try to figure out what better way to look for liquidity. I have multiple videos on discussing these kind of things, right? So you can check out my YouTube for that as well, Ikata Trading, right? But that's what I would say in that case, right? It doesn't mean that it's the exact solution, but that's what I would do. That's where I would start, right? Because think about it. If it is you're saying you're setting it at a liquidity zone at 100 pips and it keeps going, it's clear that that was not a liquidity zone. It did not have liquidity there to grab and then go back. You understand? So that's that. What about anybody else? Anybody else? All right. So Grade Designs asks a very good question. When do you move your stop loss into profit? So this is a question that boggles a lot of traders' minds because a lot of traders want to protect, right? They want to protect. They say, and listen, this is something that I find it to be such an audacious statement. You take the trade, it goes 16 pips in profit, you put your stop loss to break even, and then you have the audacity to say it's risk free. Yeah, I agree to an extent. It's risk free from the fact that, yes, you can't lose anything from your equity, but well, from your balance, but you can lose profits from your equity. In other words, it can come back, stop you at a break even, and then go. And I know that each and every one of you, if you have ever trailed your stop loss at break even, that has probably happened to you before. You know why? Because you're trailing your stop loss into profit or to break even way too quickly. So what I would typically do is I would wait for price to get to the next liquidity or the next area where I think it's going to try to go, and then try to move my stop to break even and then try to trail from there. And the reason for that is very simple. If price does not grab enough liquidity at the point of you trying to trail your stop, when it does try to grab the liquidity, because your stop is already in profit, you are going to be a part of the liquidity it grabs. I want you to understand what liquidity really means. Liquidity don't mean, it's hit your stop loss. Liquidity could mean take profits are being hit. It could mean buy limits and sell limits are being activated. Buy stops and sell stops are being activated. Traders are entering at this point. Market execution, buys and sells. They're closing manually. Anything to do with an order is, or it has to do with liquidity. Yeah? That's why we say that in an area where they are seeing a lot of traders entering, engaging with the market, you're seeing a lot of candles in this one area, that's likely where the liquidity might be. So until if I enter a trade and I see price don't reach there or break that particular area that I'm targeted, I'm not trailing it. Because if I do trail it prior to that, it can come back and take me out. That makes sense? James, you say you're doing the reverse of what I'm doing with your take profit. So you are essentially, all right, I'm confused then now. I'm not sure I understand. I'm not sure I understand what you mean. What do you mean by that? What do you mean by doing the reverse of what I'm doing? You are essentially putting your stop to break even soon. I explain, please. I'm actually confused. Guys, do we have, while we're waiting on James to just see what he has to say, do we have any currency pairs that we want to take a look at tonight? Anything that we want to do? Anything that we want to discuss? I know there are a few other people in here that are watching live or whatever. What do y'all think? Anything y'all want me to discuss? Want me to take a look at? I've noticed people just sitting waiting to see US 30 gold because a lot of people come here for signals, and these are the people. If you are that type of person, listen, just putting this out there. If you are the type of person who likes to come and sit down in these classes just to hear what other people think about a currency pair, it's very likely that you're not where you want to be because you're so focused on what other people think, you're not trying to learn it on your own. That's a problem. Yeah. James says you're using a trailing stop at the liquidity points. Not at the liquidity points, before the liquidity points. Right? So that's something. Right? Like I say, I have videos on that. Okay, so we'll do GJ. I had a buy bias on GJ last night. I said GJ possible buys off of this area. And it never spiked the area. It did buy, but it never spiked the area. But it is what it is. I think GJ is still possible buys because GJ is overall bullish right now, and any consolation of sell would be an induction. So I think GJ is very high possibility for buys. Now, what I will tell you is, you see this? See that? Let me remove this. You see this here? This is a problem. Why is this a problem? Because it's a whipsaw candle. What is a whipsaw candle? It's a candle that essentially clears both buyers and sellers. So it does this, this, and this, and it comes right back to where it started. Right? So it clears both buyers and sellers. In a case like that, when it's cleared both buyers and sellers, it's probably because there's an overload, and this is my belief or my concept, my thinking, there's an overload of liquidity in that particular area, and the dealer just don't know what he wants to do as of yet. So it makes sense to just get rid of everybody and start fresh. So in this case, I think that GJ can probably try to go down, maybe to the last major liquidity per se, and then probably try to climb. And to find that last major liquidity, I would go on the higher time frame to identify that. So I'm going to remove this one. I'm going to delete it completely, right? Let me delete this as well. And the last major liquidity I would say on GJ would be this last zone here. This. Because this is the last area I think price has been true and true and true and true. Let me make it a little bigger, maybe like that. This is the last major area price has been true and true and true, right? So what I am thinking is GG can probably try, and you can see probably starting to try to go even now, right? It can probably try to get back here, spike, and then go. That's what I think, right? But I do believe it's more buys. That's my thought process for GG, right? UJ, this is the next one. UJ is another one that I know people want to see. Let's take a look at UJ. So UJ was beautiful this morning as well for that CPI. I had this 2 or 3 weeks ago. I had this 2 or 3 weeks ago as well. As of right now, let me see where UJ might try to get to. I'd say maybe here. That might be trying to get, yeah, I would say maybe like that and then that. Because it needs to clear this higher. It needs to clear this high. If it doesn't, well, actually, no, it just did clear this high. Interesting. All right, I'll hold this. I'll keep this. I'll keep this bias. I'll keep this. So we'll monitor that as EUJ. And gold. I know everybody always want to see gold, because for some reason gold is a fan favorite. I thought gold would have gotten to this area and then dropped. Again, I got the direction right. I just got the liquidity zone wrong. So therefore, no setup, no trade. It is what it is. But interestingly enough, it did drop after tapping. Yeah, I would say it's a liquidity, but it's definitely not one that I would have traded, because the one that I wanted it to tap, it never did there, never went there. So I wouldn't really try this. Where do I think it could probably try to get to? I would say maybe here. I think so. Let me remove this because I don't think this is necessary anymore. I am thinking maybe this and then this. So we'll monitor that. That's what I'm thinking on Google. And well, I just have this big drawing on Google just to showcase what it really does, over the duration, the time. Eurocard. I actually like Eurocard. I actually like Eurocard. Right, so Eurocard, as of right now, okay, so first things first, directional bias. Okay, so Eurocard is bearish, but it's currently bullish, which means it's probably an induction. So let's try to see if we can find where liquidity might be. Ooh, interesting. Interesting. All right, so we know that there's possibly liquidity in this area. And yeah, I think it just grabbed from there. Let me see here. It could probably try to go again, maybe one more time, but it might be a slightly more aggressive spike this time. So we'll monitor that. That's Eurocard. What time frame do you start analysis from, please? So I actually start analysis from the 15-minute, but I would, as soon as I see what direction is going on the 15-minute, I would, if I feel like I need more information, I would go to the higher time frames as quickly as I can to try to get more information. If I feel like I have enough information, so like on UG, I know UG, I don't need to go on the next time frame on UG. I don't even think I went on the higher time frame on UG just now. I don't even think I went on like the daily or anything to find any analysis. All right, I know I didn't do this because I know UG is bullish. I know it's bullish. There's no ifs or ands about or buts about it, right? But if I don't know if it is, so I mean, you could look at this and say it's bullish. If I don't know for sure, then I would go on the higher time frame just to get a better idea, right? But that's where I would start. I would start on the 15, and if I can stay there, I would stay there. But if I need more information, I would go up on maybe the 1 hour or the 4 hour just to get a better understanding of the directional bias. I have a question for you guys as well. What is your favorite currency pair or favorite asset to trade? I think I asked this already, but I'll ask it again because it's to kind of just get an idea of a general sentiment of the 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 traders around you. I'll tell you again, and I've said this multiple times. My favorite pair to trade, actually, believe it or not, is not gold. It is AUD USD. So for me to hold this on AUD USD, oh yeah, trust me, I love this. I am in my glee right now. So Andrew says GG and US30. Anybody else? What is your favorite asset to trade? What's your favorite asset to trade? And why? Why is that your favorite asset to trade? I know a lot of people like US30 because it moves a lot, but the question is, can you actually trade it? Because I'll tell you, US30 is a different beast. US30 is a different kettle of fish. It's a different animal altogether. Many people fail very quickly on US30. So I'd be very careful if you don't know about USDT. All right. Dario says major USD pairs. So you're looking, I'm guessing all the majors: GU, EU, AU, UCAD, UJ, USD, CHF. Right. So fine, that's good. The majors are good pairs to trade. Anybody else? Guys, do we have any questions? I think I'm gonna prepare to close off here now. I have a lot of stuff to do. Like I said, I'm not gonna be doing any classes next week, nor the week after. And maybe even the week after that, I will advise and I will let you guys know. Um, but I am going to be taking a break. Yeah. Any questions? If you have any questions or you want to reach out to me directly, you want to learn from me, you'll know where to find me. My name is Brandon, and my handle is at Ikata Trading. Yeah. Any questions, guys? Any questions at all? Anybody? My channel, on Telegram or YouTube. Everything is at Ikata Trading. I say this all the time. I'll say it again, at Ikata Trading. So if you just type in Ikata Trading, or if you want the link from me directly on Telegram, t.me/Ikata Trading. If you are not sure if it is me you're talking to, ask me to send you verification of myself. Right? Ask me to send you a video saying something just for me to verify that it is me you're talking to. Because let's be real, we know the industry, these people always trying to scam you, right? I thought this was the guy that's bald. No, that's probably Cam. I am just a trader. Guys, if there aren't any questions, I think I'm going to close it off here now. I really hope that you enjoy the rest of your week. I hope that if you did take any trades, or if you are going to be taking any trades today or for the rest of this week, please practice proper stop loss placement and proper risk management. Have a great rest of your day, week, and month. And I will see you guys very, very soon. Peace out, guys.